It's not about picking stocks. It's about picking the right portfolio.
But this is from Rich. I've heard you say that a narrow risk range in a bullish trend tends to be bullish. Yesterday, I understood you to indicate Apple narrowing risk range, consolidation portends imminent reversal. Not your exact words. I don't think that's what you implied. But please help me understand.
Well, first
the idea of a narrowing risk range.
What we got to understand, Rich, is that some of the things you're saying is not what I said. Right? So what I said was that what I've said in general is that when a risk range is narrowing or when it's consolidating, that means that volatility has come down. Okay, that's a rear view. It's called realized volatility has gone down. That's just an empirical fact. Right?
4.5%.
Risk range narrows when volatility goes down. Yesterday's example was it's also narrowing within a lower high for these things. Okay, so that's the beginning of a correction from the top end of the range. That's all I said by that. That's not like, Rich, today you need to boil the ocean. No, you're not going to boil the ocean. If you want to boil a pot of water, Rich, and put an egg in it, you're going to have a nice egg. Okay? So just stay with it. Just stay with it. Top end of the range, if it's widening, means that the thing's either breaking out to new bull market highs. That's exactly what gold's doing. So that risk range is not narrowing, but volatility is low. Now that's very bullish, okay, when that happens. When volatility stays low, but the risk range is exploding to the upside, that's called a melt up, or again, a bull market that's raging to the upside. So there's a lot of different permutations. If you're just looking for one thing as a summary rule for all of it, you don't get it yet, right? If you don't, I don't blame you. It takes a lot of reps. But the best thing you can do for you and your family is when something's making a lower high and it's at the top end of the range, sell it a little bit more aggressively than you would if something's making a higher high and the range is moving higher like gold. So for example, gold yesterday. Let's just write this down in terms of some rules, because I'm not trying to criticize you, Rich. I'm trying to make you better, right? So I still can't believe I have to like sugarcoat some of these things. I mean, it's just coaching, right? But one, so you got two different scenarios. You got within a bullish trend. So again, we got positive trend. Two different setups. One, GLD, risk range, equals higher highs and higher lows. Okay? Second is Apple. That's what Rich used, right? Risk range equals a lower high and a higher low. This one is more bullish than this one, right? So in the Portfolio Solutions product yesterday, did I sell GLD or not? No. It was up. Why didn't you sell some? Because the top end of the range kept going higher, and it did again this morning. I'd know. I have it right on my desktop. This one, if I was long it, which I'm not, was making a lower high, so I would have sold some of that. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.